Welcome back to the Market Wolf. I am the Market Wolf, and this episode is going to be incredibly important. I'm going to be taking my time with it, and it's not going to be necessarily as fast as usual. If I have to, I'll divide it up into chapters so you can skip around if need be. First of all, I want to go to the monthly. You know what today has brought. We've seen it. We basically double tapped the area where we were in February. We're very, very close to really capitulation at this point. I do want to show you the monthly here because this is significant. The month isn't over yet. This could change. We could definitely see a bounce up. Okay? Definite possibility. But what I want you to see here, and what I want you to understand, is that we essentially, up here, back in January, had this bearish engulfing candle, and it took us down about to the top of our next sessions, the next several months. It's taken us down about 5%. Here we have a bearish engulfing candle that is just incredible on a monthly. Before I tell you what I'm thinking there, I want to take you back on a little trip here in time. And let's look at COVID. Yeah, bearish engulfing candle, but and then obviously another one. But I'm not sure that either of these are really comparative. Perhaps this candle is, and the exiting volume. It's comparative. Let's go all the way back to 2008. Take a look there. So here's 08. You can see much slower. Candlesticks weren't as ugly. So just be aware that we were on a slight uptrend month to month before we got this bearish engulfing candle. That is not good. Just like we were on a big uptrend here before we got this bearish engulfing candle. It could be, since we're in choppy waters, that this bearish engulfing candle does not have as much significance. However, when you look at everything that's going on in the world, in other economies, what Japan is about to do to the yen, and the U.S. raising interest rates here, Japan is basically abandoning trying to support its currency, which is the exact opposite of what the U.S. is doing. And as you know, the dollars are intricately involved with the euro, with the yen. So it's a lot of information to take in and then also think about on the charts. What I'm thinking is that we could potentially, I think around here, another 5% move down is what we'll get off this candle. I think your highs from now on are going to be around this 430.48 mark for a little while. I think we're looking at a new area here that we're going to be playing around in. I suspect we see some further drop into actual bear market territory. I want you to ignore these because this is, let me remove this stuff because those are not necessarily in those locations anymore. They're generally there, but let's just have clarity. Your last support really is at 409.97, last major support. We've kind of ended the day there. Now look, we could go down further than just that 5%. Like those new highs I'm talking about, like you can see here on the 30-minute, when you go down that 5%, I did a measured move. I did a measured move. I did not even try to line this up as in like I'm trying to find support and resistance levels. Otherwise, I would have brought that down here to the tip of this wick. But this was literally just a percentage move down I did. So if we were to have an equivalent move down, then these essentially are your new highs right here. If it's 5%, it could be more. It could be more because we're not in the bear market yet. And although I'm sure we've got plenty of room to run up, I don't even have to look at the charts to tell you that. I'm not sure what's going to happen. So clearly we have a bearish divergence on 30. You've heard me talking about these massive exiting volume at the end of the day on the 30 minutes. Obviously, it has been masking something. I think institutions were leaving, although I won't bring it up. But on the minute, if you go to the minute yourself and you look at these time frames, you go to 1930, 100 hours, and in this case, again, 1930 hours, you'll see that there was actually incoming volume back here. Let's check. Let's check right here and see what happened today and see if there was something hidden on the 1 minute. Are we getting incoming volume on this? It's possible this is a fake out within a fake. Yeah, look at that. Is that? Yeah, wow. Look at that. See on the 1 minute, that's incoming. So I suspect we get a bounce when we've got room to run. And I'll tell you why. Let me tell you why. This is just purely my opinion, okay? We could go in either direction here. I think last time I didn't give you my opinion, but somebody, I should have brought it up. Let me go to the comments section briefly here because I want to give this person a shout out because they caught on that I was actually giving my opinion even though I was saying I was neutral because I was very, very bearish. Very bearish. So, yeah, let's go down to the comments. We'll give it a minute to load. I want to look at the DXY, okay? This is what I'm thinking on the dollar, and this holds significance. You can see we've got a flight to the doctor. It's the doctor. It is the doctor, the dollar doctor. We've got a flight to the dollar to safety, and we're putting on this massive cup since 2020, and now we're beginning to put on a handle. I have a lot of respect for a lot of people that say this is probably going to capitulate and fall over. Here we go. Welcome back to the Market Wolf. I am the Market Wolf. Yeah, I am. Okay, let's go down and check that comment out. Who was that? By the way, if you haven't subscribed yet, please do. Volume profiles. Oh, just as Jason from earlier. It looks like retail is pumping the market and institutions are dumping. When I look at the order flow distribution, I like to see what's going on in the large category. I believe retail is holding up the market. At the end of the day, the house always wins. Excellent observation, Jason. Yeah, it was Doral. That's who it was. Thank you for your opinion. I can smell that soon we'll get back to the normal market, not the one that is now overflowed with monopoly papers. Yeah, absolutely. And I think, I think you all sniffed out the fact that I was bearish. This actually was the call I would have made. Although I can tell you, I would not have made it. I would not have said that we were going to go down to come back and test essentially this. Where are we at right now? Yeah, we're on the S&P 500. Yeah, I wouldn't have thought we were going to come down and test for 0997. I would never have considered that. Now you can see aftermarket, we're getting a little bounce and some flagging here. So, yeah, that makes me think that it's possible we will have a bounce. Let's take a look at some of our other time frames. That's the minute. So, we were on the 30. Let's take a look at the 2 hour right away and see what kind of confirmation we have there on some of our differing ideas. You can tell I've cleared out a lot of the noise I had on here, and I'll add support and resistance levels back as we kind of sort out what's happening, but really just wanted to have this nice and clear for you today. And yeah, so I don't have my typical EMAs up. I just kind of wanted to have these others up for now, but it's throwing off my analysis a little bit. So let me 86 those, and let's bring in my typical E EMA. Yeah, I apologize for not having all this set up like I normally do, but wow, just what a day today. And I just felt like I wanted to have a larger picture for you all. And I wasn't planning on doing a Friday episode, to tell you the truth. I was just going to get into my educational content this weekend. I was going to do maybe like a next week prediction, but this was just such a big day. I wanted to go ahead and do this. So I'm assuming that came up. It did. So yeah, we've got the bearish divergence. It's completed on the 2 hour. It's cemented. It was cemented a long time ago. Let's see how far it's worked its way up. Let's check the 4 hour. Cemented on the 4 hour. Let's check the daily. And it is in process of finishing up on the daily. So there could be some further downside. This could be a break to where we actually break down into further bear market territory. We find a new low, we get accumulation, and then we move up from there. Let's just, for the fun of it, let's play with that idea. Let's take from the top of previous highs down to measured move down. So about 6.77%, let's say, from the top. Now look, this doesn't have to happen. It could go a lot lower, but let's just see. 6.780 is fine. So maybe somewhere around 401. Somewhere around 401, we might end up with a maybe some support there. These are just some predictions. This is not very serious TA right now. Just trying to feel things out. You may have noticed in the last episode I had a triangle up that wasn't it was imaginary, honestly. It only had 2-3 areas of support. It needed a fourth. And we didn't have it. And so, man, I don't like that. I don't like it. What's going on here? That's not right. But it did confirm. It did confirm that it existed. And if you check my teaching episodes, I actually talked about how imagination is important. And so this is kind of what we're doing right now here. This is almost like a teaching episode within itself. So we'll say maybe right about there is possibly where a new low could be. It could go much lower. Okay, don't take that as gospel. That's imagination. We're just testing some things out right now. We're going to watch the market and see what plays out. We can go a lot lower. This could be total capitulation. We could head from bear market into recession next week. So just, my thinking is that the DXY, because we've got this flight to safety, that it's going to prop the economy up for a while. So we could actually see weeks and months of chop inside the market, really, in these general areas. So we could get chop in these general areas now, I think, is a possibility. That could be what's going on here. Just because the dollar is so strong, and we may not get that flight of safety into crypto and into metals and that kind of stuff. But I tell you what, when this whole thing falls apart, crypto may have a major run, and gold and silver, the other metals, commodities may have another major run. They're kind of cooling off right now, but I'd be looking for that in the future. As you can see on the weekly, increasing exiting volume. That's also the case on the monthly. That's one thing I didn't point out to you, that on the monthly we have this same situation where, I was thinking about the weekly. So the volume profile on the monthly, we had obviously terrible exiting in January, a little less in February. March, again, it's chop. And then now we're just looking terrible. We got a little bit more to go. If we have further capitulation to the downside and into a bear market, maybe we finish up here. Perhaps not. Perhaps this bullish engulfing candle kind of leaves us. And in that case, maybe we get a little bounce up off of here, we kiss this, and we stay in this range, right? We stay in this range. This range down here that I'm talking to you about is a bearish scenario. That's if we continue to the downside, this stays a bearish engulfing candle. That's that scenario. So I think really the best bull case I could maybe come up with here, if we do bounce off the 40997, is, let's just take a look at the 2 hour, because that's a higher time frame. I don't want to get into those lower time frames really with this kind of thing. So I could see us definitely retesting these areas here around this area, average 42593, somewhere in there. I could definitely see that. I could honestly even see us. Let me see if I'm. No, I don't see that. I could see us maybe back testing up to 437 on a bounce from this thing, but that's as high as I would say it will go, to be honest. Because last time, check out last episode where I talked about China and the divergence that's going on. I would be shocked if we see us going back to the all-time highs or anywhere close at this point. I think we're developing a new range here, and I think the monthly really kind of tells us the story on that. That's what we're seeing now for 3 months. So that's kind of what I'm feeling. That's kind of what I'm thinking on a long-term basis here. I've given you a bear case and a bull case really for going into next week and also into Monday. You know what to watch for. We have to watch for this bounce off the 40997 or a further capitulation to the downside. You have a good idea of what might happen if we do have further capitulation to the downside. We do know this is very ugly. We've seen what happens when we get this kind of ugly back in 2020 and 2008. Could be a little different this time, but not necessarily. So keep an eye on that, everybody. It's been fun. This is the Market Wolf. Please hit the like button, subscribe, and share. That would be awesome. And we'll see you next time on the Market Wolf.